All right, traders, this is Blake Morrow. You were listening to the Morning Edge webinar. I want to welcome you all back. So it looks like the euro's stabilizing around here. So we're going to have to see where it goes from here. I suspect that we're probably, like I said, closer to the highs than the lows, and I don't mind being short around these levels. But we're gonna take a real good look at the euro and see. So let's go ahead and make a couple assumptions here. Okay, so first of all, here is well, I guess I'll go back out to the daily chart because there's some people that are just joining me now late, and I'm just gonna say again what I said earlier. I've already started shorting some euro dollar. My cost average is at 111. I'm 2/3 size position. I don't think I want to get any more aggressive than that right now, but I am selling into the strength. Okay, previous support should act as current resistance, and that is what's stalling the euro right now. You can see here. Let's go to the 4-hour chart, and you can kind of see that. Now, the daily chart, what I think is going to be critical today is that this yellow line. This is the upsloping trend line. You look at it now and go, Blake, that's a big green bar, but there's a lot of time left in today. You can peel off 70 pips in the euro dollar within 30 minutes, and this green candle won't look so good. Okay, it's that type of market. It's that type of volatility. So just because the euro may be at 111.15 or 111.16 right now, that doesn't mean it'll be at 111.16 an hour from now. We could be, 50 pips lower. We can be 50 pips higher. So try not to read too much into the daily candle at this point, at this time of the day. 4 or 5 hours from now, we might be able to look at this daily candle and go, oh, okay, now that's looking pretty strong, or it's looking pretty weak, whatever the case is. I think 110.50 is going to be pretty critical, though, whether we close above or below it. Now, we're going to make the assumption that this low is the low for now, because that's the low that we're actually trading from. And so if you have to take the high, the most recent, oh, by the way, let me stop for a moment and say, also, today's lows is a 50% retracement of the entire range. So if you look at the, 105 to 114, 50% retracement came in to today, to basically the overnight low. Now, I personally think that there's a lot of uncertainty surrounding the euro over the course of the next week, and plus with non-farm payroll coming up, U.S. data is, obviously payroll data is not going to be affected by what's happening in Greece. We'd have to see a pretty significant decline in like U.S. equity prices, and then it's going to take a month or two for it to really get into the jobs numbers. Before employers are like, I don't want to hire anymore. It looks like the stock market's kind of rocky here. So our jobs numbers are probably going to continue to stay relatively firm. So I think that's uncertainty with what's going to happen with the referendum on next Sunday, to U.S. data coming out this week. That could very easily keep the euro back down here towards 108.50, which I think is a realistic expectation for a target. Like, I'm shorting the euro right now. I wouldn't mind trying to hold, especially if we get a decent close today. When I say decent, that would be like closer to 110 than versus where we're at. I don't think a 108.50 target is I don't think that is unrealistic. I think it very much is. Again, a lot of it's going to depend on price action over the next day or two, so we'll have to obviously be very careful. But I think this 618 is probably a realistic target. I did tweet that chart yesterday. Now, let's make the assumption here. Let me get rid of some of the stuff from last week. Let's make the assumption here that, and you can see we're going right into a sell zone, big sell zone here. You can see why we stalled. Previous support, a lot of spike low, previous supports over here. We rallied right into that sell zone, and we're starting to show some weakness. We're going to have to make an assumption that is the low. So there is the high, there is the low. Let's figure out how far we rallied. I'm assuming that's about 38%, almost to the pip. Okay, do you see that? Let me grab my pen. So from the low, there's the high, to the low, 38% retracement comes right into the highs. You see that? So theoretically, we should start heading back down again. And if this is all we can do, this 38% retracement, if that's all that we can do, we have a very good chance of heading a lot lower here. Okay. Whenever you get a 38% retracement, it's very shallow. So when you get a shallow type of retracement when you're dealing with fibs, usually if we resume our trend, it's going to be a pretty strong one. Okay. So so we're going to have to watch the euro, especially if we can't overcome highs from here. If we start turning lower back below like 111, maybe back down towards 110.50, we have to start going with the running assumption that we're gonna start targeting new lows over the course of the next 24 hours. So with that being said, what we'll have to do is mark the highs. So the highs here, and we can even give it up a little bit right to the actual gap fill, which comes in at 111.65. But the high here is 111.40. So we got two resistance levels, 111.40, 111.65. Uh-oh. Okay. Looks like my trading went down, and then this is my analysis account anyway, so it doesn't really matter. But I didn't see that come up on my other computer. Oh, there it goes on my other computer. And now it's gone. Interesting. Okay. I don't want that trading unavailable. Why? No. If I got to get out, I got to get out. All right. Right now, we are still in a range. I know you might go, but, Blake, such a bearish move overnight. Yeah, we're still in a big range. I mean, look at the daily chart. Big range. You can see how we bounced right off the 50%. So now, where's support? So where is it that if you got long overnight, let's say like Maria in our chat room, she says she got long at 110. All right, great. If you got long at 110, where do you get concerned? My 2 cents are you get concerned below this low. So if you breach back below 110.50, which, by the way, if you look at the daily chart, again, it's that big yellow trend line that you see there. If you get below 110.50, that's probably going to be pretty concerning. So this low here will be 110.57. So I'm going to call it 110.50. All right, I think that's going to be pretty good support for today. If we get below that, you're going to have people start, targeting new lows, I think. Okay. All right. Let's go look at the cable, because the pound, obviously it rallied back with the euro pound that dipped below 70 cents, 70 pence rather, right at the opening. At the open, we dipped below 70 pence, and then we rallied back. So here's the pound. Remember, we had this drawn from last week. If the cable gets to 158, that's resistance. Cable gets down to 156.50, that's support, right? We drew these blue lines didn't transfer over the weekend like they should have. I had them drawn on Friday, if you recall. It looked like this, right? They just didn't transfer over the weekend. So look, we gapped down to important support, which is 158.60, and we bounced, as expected. So what that tells us right now is how important that that support level is, because if you're long the cable, what probably went through your mind that we held this 156.64, 65 level, I'm just going to call 156.60. You probably wiped the sweat off your brow and said, thank God. Okay, if we break through that, look out. 156.60. That is very important support for the cable. it's proved it now a couple of different times. So resistance, obviously back up at 158 if we can get there. The problem with that if you're long the cable, the problem with it is that you just watch the euro bounce 100 pips and the pound has not. So now a lot of that has come through the euro pound, which, I sold the euro pound at basically 70, 80. Okay. On the rally. But if you're long the cable, you're probably going, hey, wait a second, the euro just rallied and the pound didn't follow. So that's kind of concerning. Um, So just keep that in mind, because if the euro starts pulling back towards 110.50, that, in my opinion, will put this support at 156.50 in play. Okay. All right, let's take a look at the Swissy. As much as I don't want to take a look at the Swissy, we'll have to look at it because, obviously with the Swiss National Bank, announcing that they were indeed intervening, that spiked us up, and then we came right back down again, hit new lows. This is very dangerous here. 94 cents still continues to be extremely important resistance. Notice how we can't hold spikes above there. Okay, so moving forward, it's really important resistance. 94 cents. Now, get rid of this. Excuse me, I'm gonna have to sneeze. Stand by. Okay, I'm back. Huge support comes in at 92.80. I'm staying away from the dollar Swiss right now until we get past this referendum next Sunday. All these dates keep getting pushed back. 92.80. I want to see how the rest of Europe reacts to this Greek crisis. Okay, let's go to the yen. So the yen, I still got my short position from last week. I'm short at 123.98 as my cost average. I'm up 105 pips. I'm just sitting in it. I'm not doing anything. What's interesting here, though, I think this is obviously very important now. We can delete that, or actually just move that down here. Let's get rid of this. Obviously, I don't have to, point out the obvious now. That is critical resistance, 123.25. Okay. Support. You can see how critical the support is. I know we spiked below, but really it comes in at 122.30. Okay. So 123.25, 122.30. If equities start to sell off, this comes back into play, these lows. Obviously, if U.S. equity markets fill their gap, the upside comes back into play. So 123.20 is resistance. And 122.30, that's pretty key support. I know we've been below it, but it's really the close below it that's going to be super important. Okay. The close below, actually, it's going to be 122.40. 240. Okay. Those are really important. That's a really important support level right there. And we are still in a range. As much as we don't want to be in a range, we are still very much in a range. Let's go take a look at the dollar Canadian. So the dollar Canadian was just hitting new highs. It's already pulled back a little bit this morning, but you can see, wait a second here. Okay, grab my cup of coffee here. Let's delete this for a second. That that was from the flag pattern, right? That's all that is. It's really just the flag pattern. But what's more important right now, and I'm gonna change up the colors of some of these lines. So that resistance comes in right now at 124. Support is still down here from last week at 122.75. But just keep in mind that the dollar Canadian's now getting close to a breakout. I mean, I think the risks are getting high that we start really moving again. We've been consolidating for quite some time here in the Canadian. And, if we start breaching like 124, then that puts this flag pattern back into play. Now, this flag pattern, just remember, this is a very big, big flag pattern that if we start breaching like 124, 125, I mean, that's just really going to start opening up the upside again. Okay. And maybe you look at crude oil is really weak today. So, okay, what was the number? 124. Resistance 1.24 for today. 122.75 is support. We are in a range, but I don't think we're going to be in a range for too much longer. I think this dollar Canadian is really going to start threatening a breakout soon. Okay. Oh, there you go, Euro pound. Down you go. Okay, where was I? Let's go into the Kiwi. So here's the Kiwi. Kiwi is still on a very bearish trend. I'm strongly considering shorting some Kiwi this morning, especially if markets look like you can see. Oh, futures are recovering a little bit. Hasn't had much of effect on the FX market. The dollar is strengthening, dollar yen strengthening, the euro dollar's weakening, so the dollar is firming up. But if equity markets start to roll over and we start heading back towards our lows, I think I'm going to start looking at shorting the Kiwi again. But as you can see here, what we're doing, we're really just kind of wedging here. So any rally to 68.80 supports it, like let's just call it 68 cents. Now we've been as low as 67.83, but it was it was just a spike below for a very short period of time. Um, so 68.80 and 68 cents. We are still in a bearish trend, so 0.60. And we have to stay below the 68.80 to keep the bearish trend intact. Actually, the bearish trend is intact as long as we stay below 70 cents. This yellow line, which is our more important trend line that comes into play, right? So even if we break through here, we still have. I personally, if we spike up to 70 cents, I would be all over shorting the Kiwi. I just don't know if we're going to make it up there. Okay, when I come back, we're going to do the Aussie dollar index. We're going to look at the peso, which I haven't even oh, the peso. Bonkers strong. Okay, so we'll take a look at the peso, the dollar, Swedish krona, Norwegian krona, and then I'll take some of your questions after that. So thank you all for being here. Don't go anywhere. It's obviously a very crazy day. Be back in a few minutes. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. Hope everybody's having a great trading session. And, it's actually relatively quiet out there. The euro's starting to show little signs of weakness. The dollar's starting to firm up. You can see the Aussie dollar is starting to show some weakness here as we dip back below 60. Pounds back below 57, 157. The Kiwi starting to roll over a little bit. The dollar Canadian's firming. So we're seeing a little dollar strength come through. Not a lot, but a little bit. Let's go ahead and take a look at the. Let's go over to the. I think it's the Aussie that I have to finish up with. Yeah. Let's go take a look at the Aussie dollar. So the Aussie. I think one of the benefits obviously to the Aussie is going to be what happened in China over the weekend. So you had the Chinese interest rate cut by the PBOC, and that helped support the Aussie dollar. But I don't know if I'd play the Aussie, so to speak. It's like, do you want to play the Aussie dollar, especially if the market looks at the dollar as a safe haven currency? The Aussie could rip lower at any moment. If you want to play the Aussie to the long side, you might choose a cross rate, like the Aussie New Zealand might be a great opportunity. Instead of being long the Aussie dollar, long the Aussie New Zealand, short the Euro Aussie might be another trade. Selling into the strength here. But you can also trade the Aussie dollar as well. But I just think that if the dollar comes back into demand, you're going to especially with some risk aversion, then you're going to have a little bit of a problem on your hand if you're buying Aussie dollars, so to speak. So what we've done, just like the euro dollar, same thing. We rallied back to 38% retracement. You can see this. A lot of resistance up here. Okay, big sell zone, 38% retracement on a 4-hour chart. So right now, 77 cents is going to be key resistance. 77 cents. In fact, if we get up to 77 cents, I might actually short some. This is very much a range in the Aussie. Okay. The key is, or what's critical in my opinion is, and let me get rid of these lines from last week. Let's just get rid of them for now. What I think is going to be really critical here is this support. So you can see how important support 76 cents is. I mean, we spiked below to 75.83, but 76 cents is going to be very important. We take out 76 cents in the Aussie dollar, then I would be pretty convinced that the downside's back in play. Okay. All right, let's take a real quick look at the dollar index. Okay. Now, I made an observation last week to the chat room, and I'm gonna let you know what I've been noticing here. If you watch the dollar, do you see this the current price? Look where my cursor's at. Okay, watch it for a moment. What you'll notice is price is changing. So even though that they're only displaying TradingView is only displaying the daily chart candle, it's not an end of day. It's not truly end of day. They're actually still streaming data. You'll notice that see the number just went from 95.65 to 95.66. It's not end of day data that they say it is. A little secret. They're actually still updating the daily candle. Okay, and we'll take advantage of it as long as they continue to do that. That's great. You know, that means that everything that we're looking at here is current. Um, okay, with that being said, you can see this trend line, how important this is. Let me get rid of this descending wedge. Okay, and we're going to get rid of that fib for now. And this is probably going to be very important still, because that was the breakout. And well, actually we're there right now, but I should probably just take today's lows. Today's low comes in at 95.47. Okay, 95.47, and key resistance is obviously this downsloping trend line. You can see it right here. That's what capped us. 96.43. So let's call 96.40 is going to be resistance now. 96.40, and the low here is 95.47. We are in a range. Okay, we are in a range, but just keep in mind that this dollar, this is going to be really important, especially if we break out here, because if we break out into new highs, that would actually put the euro probably really realistically back at 110. You would have to imagine that the dollar is trying to stage a significant rally. Okay, but right now the euro's holding up. We're holding above 111, and the pound's holding at 157. All right, so everything's holding up right now. Okay, let's go to the peso. Here's the peso. You know what's interesting about the peso here? I'm gonna have to delete all this stuff. What's interesting about the peso is we spiked up, gapped up over the weekend. We're really holding that gap. I mean, we're holding up pretty well. Gosh, this euro's starting to bounce back again. The euro's only 13 pips from its highs again. So just keep an eye on it. So if we sell off, we should have support right here. But see, it's like it doesn't have really key resistance either. I don't know. I don't know. What to do, what to do, what to do. I don't think there's much to do with the peso at the moment. Let's take a look at the Norwegian krona. Now this Norwegian krona, this is a threat because it's holding on to its gains. If for some reason the US dollar Norwegian krona breaks 8, thing is going to be history, guys. I'm just saying, if we break through 8, because remember, the Norges central bank is cutting rates. It's important to understand that. Okay, so watch above 8. Big resistance support is going to be today's lows at 780. 780.450. Okay. US dollar, Norwegian krona, 7.8450. 8. Okay. And yeah, I think you gotta keep an eye on the Norwegian krona because it's strong. It's holding up, And if it breaks through 8, it's going to be a big move, I think. It's ranged right now, but it looks like it's about ready to. I think if the euro dips back below 111, if it dips back below 111, you got to watch the U.S. dollar Norwegian krona to the upside. Let's take a look at the Swedish krona. And by the way, this is critical resistance. Okay. Swedish krona. So we spiked up. There's your bullish wedge. Spiked up to the 618, came right back down. I don't think there's any real reason to be a buyer of the U.S. dollar Swedish krona right now. I mean, just unless you're buying it just to fill this gap right here. It's basically the same trade as shorting the euro dollar, I think. Okay. So there we go. Let me see if I can. Oh, here's your bias chart. Let me see if I can take some questions really quick, and then I'm going to flip it back over to the charts.